Hey, real estate investors, property owners, business owners, and savers. Listen, we're going to get into it. We're going to talk about how do you create and multiply cash flow without tenants or without having to make a sale within your business. This is a part of a series of classes that I'm doing. This is class number 8 of this particular curriculum, and we're going to talk about profit center number 3. You know who I am, Jeff Taylor, your wealth architect. The reason why I refer to myself as a wealth architect is people continue to tell me, Jeff, you are the problem solver. So the community says I'm a problem solver, so just going to go with that. But how do you create and multiply cash flow without tenants and for business owners without having to make a sale? Well, let me ask you a question. Have you ever thought about cash flow uh, only coming from tenants, or cash flow only coming from making a sale within your business? Most investors think that way. Most business owners think that way. But what if I told you that your greatest cash flow source, ladies and gentlemen, could be created without dealing with a single late rent check, eviction notice, maintenance call, or servicing a sale that you made? That's what today's session is all about. Unlocking cash flow without depending on a tenant or a client, and how to turn liabilities, ladies and gentlemen, into liquid income streams utilizing your index universal life policy. Now, as I've told you before, should not be considered coaching. This should not be considered advice. This is for entertainment purposes only. If what I'm saying interests you, you can reach out and we could talk a little further. Okay, so we're talking about how do we use your index universal life policy, your payments, and what I call in my system, which is what I call the trifecta formula, which is based on the process of doubling property equity value, doubling cash reserves, and doubling cash flow without the need of a tenant. This is very, very important because this relies primarily on utilizing your property that you live in or property that you're renting out as an income and cash flow source without the need of having a tenant. Okay, so most people believe cash flow comes from what? Tenants, as I just made mention, market appreciation, or what? Working more hours or getting more sales. No, 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 no. That is a borrower's mindset, ladies and gentlemen. That is not the banker's mindset. The truth is that you don't need more effort or more rent checks or more risk. You need strategic positioning. I love that word positioning because from what I teach, it means that you are evolving and learning how to better position yourself to create passive cash flow without the need of a tenant. So as we know, cash flow can be engineered from what you already have. It can be engineered from your mortgage payments. It can be engineered from your savings. It can be engineered from your debt payments. And obviously, we're going to be utilizing Index Universal Life along with some other financial tools. Now, once again, because there's some nuances here, and for the sake of time and details, everyone's situation is different. And so we don't want to take one picture to mean something for all. We're just having a conversation about how this process works, and then you can take it and use it as you will. Okay, so if you're paying $2,000 a month on a mortgage, right, and another $1,000 on credit cards or car loans, you're already flowing $3,000 monthly. Did you think about it in that way? The question is, who's profiting from that flow? You or the bank? Today, I want to show you how to reverse that flow and turn those payments into profits, right? Okay, so we're going to get into how do we use Index Universal Life as a monthly income generator or a monthly cash flow generator. How do we structure that? How do we do that? Okay, so when we structure Index Universal Life to become a cash flow machine, what we have to remember is that the purpose of life insurance is to protect present and future cash flow and assets, to protect present and future cash flow and assets. And now I know, we have the death benefit element of that, but what happens if you're not going to die for another 50 years, right? So we want to create tax-free savings. We want to create a guaranteed credit line, if you will, or cash flow line. And we want to create the potential for a lifetime income stream. So this is how we work. We're going to fund the policy. We're going to watch it grow tax-free, and we're going to borrow it against it to create cash flow and to be able to use that cash flow for any need, especially paying expenses. And the reason why we want to use it to pay expenses and liabilities is because when it is done correctly, you can create 5 different miracles or 5 different profit centers from utilizing the policy to create liabilities or to use it to fund business opportunities. Meanwhile, even though you take a policy loan, your account still earns interest on the full amount. This is probably one of the super secrets of the wealthy, how they use life insurance in a way to solve current financial problems and at the same time build wealth with the same money. This is a super secret, ladies and gentlemen. I want to unveil it and talk about how we can use that in solving today's financial challenges or using it to create more opportunities for yourself. So in this example, let's just say if your policy has $100,000 of cash value and you borrow $30,000, right? And you still earn interest on the full $100,000. Again, this does not reduce the balance. The reason why this is so important that we understand this, especially my real estate investors, especially my business owners, where you're consistently dealing with cash flow, is that when you use your savings to pay a bill or to pay a liability, or you use your full of cash to pay a liability, the problem with that is that that money is then gone forever. That money has then been depleted and can never be used again. That specific financial mathematical fact is hurting your current and future cash flow and asset accumulation. We want to reverse that and we want to stop that because that's reducing and creating a negative net worth against you. And that also runs into creating additional other problems. Okay, so what we want to do is you can use that $30,000, right? You can use it to make payments on your property. You can use it to replace an income. If you have an employee that left you unexpectedly and now it's in fact impacting cash flow, you can use it to replace that. Or you can even reinvest for my investors to buy another property. The whole point is that's cash flow on command and no tenant or another sale was needed to create it. Now, of course, there's some nuances here. There's some details in here that we need to get into. But the point being made is that we want to convert payments into cash flow. Okay. So here's what the wealthy do. They never send payments without creating profit and reserves first. Let me say this again. They never send payments without creating profit and reserves first. Let's break down to reposition your payments. Your mortgage payment becomes an equity velocity tool when paired with a policy loan. Let me say this again. Your mortgage payment becomes an equity velocity tool when paired with a policy loan. Why? Because your credit card debt becomes a profit center when you eliminate the interest and recapture the monthly flow. Your insurance premium becomes a cash growth account that compounds and produces tax-free opportunities. Well, simply put, you calculate your total monthly payments, mortgage, credit card, car, and your insurance premiums and redirect that money into an IUL policy using a debt transfer or liquidity stream. You're going to create a payback system utilizing policy loans and cash value growth to make those loans the same payments while creating reserves. Now, there's an art and science to this one, but when this is done correctly, this is a beautiful thing because this strategy makes your budget perform double duty. As a matter of fact, it's triple duty because you're paying bills and doing what? Producing cash flow without having to actually work for it. It is one of the truest forms of passive flow of cash. So, okay, so then how do we multiply this? How do we take this to the next what? To the next level? Well, there are 3 ways to multiply cash flow without tenants or without having to make another sale, right? As a business owner. So let's just take a look at this. So now we multiply. We want to take those three factors and what I call the three trifecta cash flow strategies to amplify your results. First of all, we're going to do a debt transfer arbitrage. This is very important. And I love having this conversation because when we do a debt transfer arbitrage, what you're doing is absorbing your debt. In absorbing the debt, the reason why I say absorb that debt is because it hasn't gone away. That debt is going to compound regardless who is servicing that debt and who is holding that debt. That money is going to compound. What a debt transfer arbitrage does is shift the compounding to you. So if we use the debt payments to fund the IUL, we can eliminate interest to the banks and transfer it into our own tax-free reserve. The net effect, ladies and gentlemen, is that you turn interest into cash flow. Now, I wish we had time to go a little bit deeper here and roll that conversation into the 5 miracles of money. But the point being made is that you want to turn interest, debt interest, into cash flow. Number 2, policy loan recycling. Well, you want to borrow against your policy to fund expenses or to reinvest. Okay. You're going to use your cash flow from other sources to repay yourself, not the lender. Not the lender. Net effect, once again, is that you can create an infinite banking model where you're creating an infinite income loop, just like the figure 8. Now, I wish I had the time to really put this into a PowerPoint, but there's a point that I want to make here. If this is information that you like for your real estate investment course, you have a class, you have investors who would like to learn more about this, reach out to me. Go to my calendar, set up a 15-minute. Let's talk about how we can put together a class specifically for your group. Okay, or if you just like it, you're enjoying what I'm saying, put a kind word in the comment. Let me know your thoughts. If you have any questions, you can put those in there too. All right, so the next, number 3 is reserve and velocity play. Well, once your reserves are built, this is where we got to be a little patient, right? We're going to use the velocity of money to keep every dollar moving. We're going to pay, borrow, invest, and cycle. Pay, borrow, and invest, and cycle. So again, the net effect is that you have the same dollar. The same dollar is moving through 3 to 5 income streams or cash flows. This is so important. We are learning the art and science of recapturing our money and using it to either reinvest or to solve problems. Okay, so this is how the 1% play that game. They're using leverage and not labor. This is an important point here because real estate investors are taught buy more property, buy more property, buy more property, buy more property. Okay, that's fine. But if I'm not utilizing each property and maximizing the potential profit from each of those properties, you are losing thousands and thousands of passive dollars. Let's restructure, build the empire, but use the trifecta system to create cash reserves, compounding cash reserves that's going to create more safety, more security, and give you more opportunities for reinvestment where those interest payments will be coming back to you. Okay, so final call to action. Now that you've seen how to create and multiply cash flow without tenants, imagine what happens when you no longer depend on red checks. Imagine what would it feel like to have enough cash reserves so if you didn't make some sales, you still got potential cash flow coming in and it's tax-free. And you stop losing money to interest. Listen, I want to teach you how to finally control your cash flow pipeline. Your next step, ladies and gentlemen, hey, book a 15-minute trifecta strategy session. Let's take a look at your numbers and see how much monthly cash flow you could be generating right now without needing an extra tenant. Now, I'm not telling you not to get tenants. That's not the point here. But what I am saying is that we want to be open-minded to creating additional tiers of wealth without depending on property appreciation and without depending on tenants. Book a call with me. I'm going to send you the wealth and cash flow assessment. We're going to go through it. In 15 minutes, it'll just be an introduction, just an initial conversation. And we'll see whether or not we should go to the next step. But I'm looking forward to it. Listen, get your customized 3x trifecta cash flow report, which is an extension to that. And I would love to teach you how to multiply and to position yourself so that you're no longer losing interest payments, and those interest payments are now coming to you. I look forward to seeing you guys. Thanks again. Listen, if you like what was said and you think this was of benefit, let me know. Put a comment. Put a nice comment there. Y'all know what to do. All right. Take care.